Hello. The company being analyzed today is GK Energy Limited. This is a company which installs solar pumps, solar water pumps. Okay, it only installs them, it does not manufacture them. It designs and installs them, but does not manufacture them. Today, we're going to analyze the company's financials, its business model, and what it actually does. And finally, we're going to analyze its latest con call to see some more information, to find out some more info about the company. This is a very fast growing company. Okay, let us start. First, we have the market cap. Market cap of 3087 CR. So it's a pretty small cap company. Current price of one share is 152 rupees. The stock price to earnings ratio PE is 21.2 times. Okay. Now ROCE and ROE. These figures are not always accurate on this website. The website here mentioned is screener.com, of course. Great website. Numbers are not always accurate, but many times they are. So, return on capital employed of 74.3% and return on equity of 101% are fantastic numbers. Though sometimes very high return equity can be a red flag because very high debt, okay, very high debt very close to assets can actually distort ROE. It can make them feel very good, but it could be a red flag. But overall, generally speaking, a high return equity is seen as something good. Now we'll move to the company's P&L from 2022 all the way to 2025. Here we have all these figures in crores. You got sales, you got operating profit, which is the same as EBITDA, and at the very bottom we have net profits. Okay. So in 2022, the company reported sales of 70 crores. But then just a year later, the company reported sales of 285 crores. 4x revenue, 4xing the revenue in 1 year. In 2024, 411 crores of revenue, which is very impressive. Then in 2025, 1095 crores of revenue, 200 crores of operating profit or EBITDA. All right. And finally, 133 crores of net profit. And compared to the previous fiscal years, only 36 crores, then 133 crores of net profit. In terms of percentages, the compounded sales growth, CAGR for revenue over the last 3 years has been a phenomenal 150%, not annual, it's compounded. Okay. Compounded profit growth has been 340% over the last 3 years for profits. And TTM, if you're wondering, is trailing 12 months. So the previous 4 quarters, not the whole fiscal year, because we are in September quarter right now. Sorry, we are in December. We are in December, so TTM will be till last December, while fiscal year starts from April in India at least. And return equity 3 years ago was 97%, and last year was 101%. So return equity was already very high, but has gone even higher, which is good. Then we have the company's cash flows. This is not a company's strong suit. Focus on cash from operating activities. So in 2022, the company reported cash flows of 1 CR. Good. 2023 minus 16 CR, 2024 minus 5 CR, 2025 minus 99 crores. All right. So cash flows are not a company's strong suit. Now let us analyze what does the company actually do. So here we have the business overview. The page is a bit cut, like not all of the page can be seen because then reading all this gets a bit cumbersome. So first thing, business overview. India's largest pure play provider of EPC services for solar powered agricultural water pump systems. Big sentence. So simply saying the product here is solar powered agricultural water pump systems. So these are water pumps for agriculture, but they are solar powered. Here it says India's largest pure play provider. So it's largest pure play. Now, pure play here is referencing to, from what I understand, installation of these solar pumps. Let's just call them solar pumps. So there will be companies which will manufacture solar pumps and just sell them. This company, GK Energy, does not manufacture solar pumps. It only designs them and installs them. It gets the manufacturing done from some third party companies. Okay. That's why it's India's largest pure play because Shakti Pumps is still bigger, but it's not a pure EPC. EPC Uh, to explain it simply, think of it right now as installation. It's pretty inaccurate, but just installing it. Shakti Pumps does produce the pumps and installs them, but only installation, not manufacturing, only installation is GK Energy. That's where it's largest. All right. Uh, it's the key agricultural states Maharashtra, Rajasthan, Haryana, Uttar Pradesh, and Madhya Pradesh contribute around 84% of India's total solar pumps installed. So, India's total solar pump systems involved, these like few states. GK Energy's current order book had orders from customers around 863.95 crores. This will provide revenue for the next 2 quarters, from what I understand. 863.98 crores, of which 846.15 crores comes from their pumps, meaning 36,414 solar pumps right now they have as orders that customers have already given these orders, but they yet have to just supply them and make them. And the remaining 17.83 crores are solar rooftops. So solar panels installed on rooftops, 17 crores worth of orders are being given for that. 17.8 crores. All right. Moving on. Let's make myself smaller. I look pretty annoying. First of all, number of pumps. So in 2023, the company installed around 10,787 solar pumps. Okay. In 2025, 45,544 pumps. So more number of pumps, more revenue. And keep this in mind, this number, 45,544 pumps in fiscal year 2025. Revenue from operations, we already saw. Big growth. EBITDA, we already saw. Profit after tax, we already saw. But again, massive growth. EBITDA growing actually faster than revenue, and profits, of course, also growing faster than revenue. Then, 17 plus years of expertise, 5,000 plus villages reached, 1 lakh plus solar pumps installed till now. Okay, a cumulative, adding all of its solar pumps installed. So, till now, 1 lakh plus solar pumps have been installed. Then, number two in solar pump installations among pan India players. So from current year 2022, current year is like January to December, all right, to current year 2025. And like this report, this thing was published on like September-ish. So like October, November, December are not there. That's why current year 2025 numbers will be a little lower, but that's only because like October, November, December are not included in this report right now. So it is the number two in total solar pump installations. As you can see, we got Shakti pumps, 1.24 lakh, followed by GK Energy, 56,552 installations of solar pumps. Then we got Rotomag Motors, Tata Power Solar, we got Oswal, we got Ecozen, and we got other players. So the second largest, and I think, yes, leading pure play provider of EPC or solar pump systems in Maharashtra. Okay, so Maharashtra is the biggest state in terms of these solar power systems. It is the biggest state, and there will be this thing mentioned. Okay, PM Kusum scheme. This is big. PM Kusum scheme is this scheme for like installing, I think, solar pumps in like India, especially in Maharashtra. This is extremely important. Among other government schemes, this is the most important government scheme for these solar pump companies like Shakti, GK Energy, Oswal, Ecozen, and others. So you can see currently that how many pumps have been installed under PM Kusum. 14% market share, around a 14 to 15% market share is with GK, with Shakti having 17%. So good market share in this very important scheme, okay? And the PM Kusum, the component B, the component A, component B, component C, but PM Kusum, very important scheme, keep that in mind. And Maharashtra has around 43.6% market share in this like scheme. It's very important, okay? And we will talk about PM Kusum 2, which is going to be coming. Now, products of the company. We got solar agricultural pumps. Okay, we got solar rooftops. All right. What else? We got more products. We got solar pumps. Okay, solar photovoltaic modules, which is they don't produce this. They don't produce this stuff. They get this outsourced. but modules are like panels basically. Like modules make up panels. And we got solar water pump controllers, which is another component they said. So good. Moving on. Management commentary on quarter two fiscal year 2026. So in quarter two fiscal year 2026, the latest quarter, first of all, 24,502 solar powered pump systems were installed in the H1. H1 means quarter one plus quarter two. So in fiscal year 2025, 45,000-ish pumps were installed, and in the first two quarters of fiscal year 26, 24,502 solar power systems were installed. 50% growth over the previous time frame. 50% growth. Then the EBITDA margin reached around 20.2%. Okay, 20.2%. Unfortunately, trade receivable days increased, which is this is the bad thing. And we discussed the order book also. All right. But EBITDA margins have reached 20%, which is a very good thing. That's a pretty good margin. Then a growing market for solar powered pump systems, which this is very interesting. So India currently has around 118 million farmers, which are depending on around 30 million pumps for irrigation. Okay. And if I'm correct, see, look at this. Out of the total number of farmers, right? First of all, 73.3% do not have access to good pumps. Okay. Now, of the remaining 100% minus 73.3%, which actually have like access to some kind of water pumps, 6.8% are powered by diesels. Okay. 18.6% are powered by electricity from like other renewable sources, maybe even like fuels, fossil fuels, and only 1.3%. So there's this large, massive opportunity. First of all, the first opportunity is for solar to replace electricity and diesel pumps. That is the first opportunity, okay? Replacing these. The second opportunity, and we will discuss why they may replace this, okay? We will discuss that. But the second opportunity is this untapped potential. Less than 30% of farmers, look at this, less 30% of farmers have access to irrigation. It's a massive market, untapped potential, which is being supported by the government. Then the Indian solar pump market is expected to grow 8 times. What is this? What is this value? Okay, whatever this system is, it grew from 19.3 something to 38.9. Then it grew to 129.8. Is this billions of dollars? What is it? I can't find it. Whatever it is, whatever this number is, it's expected to grow to 300 from 129.8 by around fiscal year 2029. That is the estimate. I don't know what this actually is. Is this like, okay, I don't know. Number of, is this millions of dollars? Is this like number of pumps installed in like lakhs or something or thousands or something? I actually don't know. Whatever the number is, it's expected to grow. And, and this is very important. So first of all, these are the schemes. First, we have PM Kusum scheme, which is targeting to solarize 1.4 million standalone off-grid pumps and 3.5 million grid-connected pumps. So PM Kusum, Magil Tyala in Maharashtra, and Pradhan Mantri Krushak Mitra Surya Yojana are just some of the schemes which is boosting solar pumps. Either they're targeting subsidies for them or they're directly installing. Now this, look at this. Now a normal diesel pump or normal grid pump, according to this report. Now, these are in millions of rupees, okay? Millions of rupees, it's mentioned here. These values are in million rupees over a 10-year period and it excludes the pump replacement cost. So, it's excluding pump replacement cost. So, millions of rupees over 10 years. Cost to farmer for a normal will be 1 to 2 million. And a grid, I think, is a what? An electricity. So the grid provides the electricity to the electricity powered pumps 0.19 to 0.2 million rupees. So grid is way more cheaper than diesel. But the PM Kusum, there are two types. They are either non-special states or the special category states, whatever. Let's go with the more conservative non-special states. Only cost 0.07 to 0.11 million rupees. Cost to government for grid is 0.23 to 0.24. But look at this, 0.11 to 0.15 million rupees for the PM Kusum, the solar powered ones. Combined cost in diesel is like 1 to 2 million rupees over a 10-year period, and grid is 0.41 to 0.42 million rupees. The solar ones are way cheaper. They're way cheaper. Farmer savings, like of installing solar pumps as compared to diesel grid, look at this, 0.8 to 1.4 million rupees, 0.09 to 0.12 million rupees. Like, look at these. Basically, it's way cheaper. It's way cheaper. And here it's mentioned negligible maintenance expenses for like solar pumps versus 60,000 to 1.6 lakhs annually for diesel pumps. So it's way cheaper and leads to much more like cost savings for the farmers. And again, why solar pumps make economic and operational sense, reduces discoms like distribution companies, like power distribution companies, discom subsidy burden by minimizing agriculture power losses and infrastructure strain. So it's even beneficial to discoms and beneficial to farmers. That is the argument they're trying to make. All right, very, very interesting. So, according to the report, as a summary, I could not understand it completely. It's better. It's just better in terms of cost savings. And finally, let's analyze the con call. Okay, here is the con call. Managers and investors of the company they meet, or shareholders they meet. Shareholders ask questions, managers answer. Very simple premise. So we first go to page 8, sorry, page 7. Yes, page 7. A question has been asked. Question has been asked for targets. So question was, how about the second half of fiscal year 2026 and 2027, fiscal year 27, going to pan out in your opinion? We have done roughly 24,500 pumps in the first half. And what number can we say for fiscal year 26 full year and target for fiscal year 27 and also revenue and EBITDA targets? So he's asking fiscal year 26, the fiscal year we are currently in, and fiscal year 27, what are the targets? Answer given by management. If we see historically, so I have 65% of the revenue business coming from H2, and that has been the history of what we have been doing. If I compare it that as well, we're expecting any number in the 50,000 pumps plus minus 5,000 we're talking about. Okay, and a bit below 70 to 75, 70 to 75,000 pumps for fiscal year 2026. So first, for H1 fiscal year 26, we already saw 25,000 something ish pumps. And in the H2, expecting around 50,000, 45 to 50 to 55,000 pumps installed. So overall, fiscal year 2026, 70 to 75,000 pumps. And remember the earlier number, 45,000-ish pumps for fiscal year 25 installed, solar pumps installed. So yeah, you can just see the calculation of the growth rate. All right. Then the question asked, very important. One question about PM Kusum 2.0. PM Kusum 2.0 is the next reinvention, you can say, the next part of PM Kusum. Could you help us understand, in your sense and all your discussions you have been having with the various officials, how is that going to pan out, the size of the opportunity, and all of that for us? So, PM Kusum 2.0, they've been talking with officials. What is it looking like? Some initial info. Answer. See, opportunity size is officially yet to be announced, but if you see very briefly see, the success of PM Kusum has been demonstrated in the ISA, that is the International Solar Alliance, very openly by the government of India. And it has given the suggestive direction to the other peer countries to implement the solar agri pump. So good interest has been shown by the Indian government and even internationally suggestions have been given. So it shows very much positive belief of the segment from the government side. So government is very positive. So we are expecting a very good number, and it is not less than three times of the latest PM Kusum what we have. This is what the industry believes. I'm having it. So industry believes the PM Kusum 2.0 is not going to be less than three times. It's going to be at least at a minimum three times the last PM Kusum scheme. Okay, that's very positive. That's a big size, three times. That could be big. Then let's go to page 8, 15. Page 15. All right, now here the company is explaining kind of its business model and talking about how it can sustain its profit margins. Okay, this is very important. So, C, number one thing, we are the asset light company. Number two, we are pure play EPC player. So, our core and main business is to do the EPC. It is not to do the manufacturing anything. Number three, on the profit side, see, whenever I get the order and my income, so my sales price goes down, I go back and negotiate with the vendor. See, this sales price is down. Now we sit, we understand, and we go ahead. So I do not get that pressure of the margin going down. That pressure gets transferred in the whole ecosystem. Okay, he's saying that let's say the solar pumps they're selling, the price goes, for some reason, there's massive supply, not enough demand, and the price goes down. Now, because they're trying to say they are not a manufacturer, their profit margins are not going to be affected because they will go back and negotiate with the vendor. So the third party manufacturing company, they're like manufacturing, they're getting the manufacturing done from, they're going to talk with them, they're going to negotiate with them so they can reduce some of the cost. Let's continue reading. So if I'm the manufacturer, then everything comes on my head. When I'm not a manufacturer, I'm getting manufacturing sourcing done, then it gets transferred. In bad time, asset light model, bad time in the sense, less margin time, I would say. Asset light model, make sure the margin remains intact because, okay, he's saying the asset light model ensures that the margin remains intact because if I'm buying with someone today 70 to 80 to 50,000 pumps, I'm moving from him, his complete vertical gets disturbed. So the company is getting 70, 80,000, 50,000 pumps. They're getting such huge volumes of pumps. If the vendor, the third party manufacturer says no and they move the business, the entire vertical gets disturbed. The entire business gets disturbed because that's so much business. He definitely reduces his profit. I'm not supposed to reduce my profit. That is why you can see my margins are intact. It did not went down. That's the beauty of pure play EPC player and getting the manufacturing done from other people, those who have the huge and large setup in our brand name. Very interesting. This can explain why I think like Shakti Pump's margins went down. I think Oswald Pump's margins also went down massively because the rates for like Magal Tyaga, yeah, the rates, that is the per installation price, it went down for Megal Tyaga scheme. It went down, I think, like 7 to 8%. The rates went down. I think Ospal was affected a lot. I think Shakti was affected a lot. I think GK was the only was one of the only ones not affected. Their margins actually stayed intact or slightly increased, 20%. So I think Oswal has higher margins, but they were affected. And yeah, that kind of explains. That's, I think, interesting explanation. They can basically pass down the cost. This shows pricing power. If this sustains in the future, this shows pricing power that they're able to very much maintain their margins. And they have the power to pressure the suppliers and vendors that you have to supply to us at a reduced like profit. Your profit is reduced, but GK's profit does not get reduced. So yeah, good display of pricing power there by the company. And this is like they are expecting another 15 to 18,000 pumps in quarter three orders. So in quarter three, they're expecting around 15 to 18,000 more pumps as orders. So orders of like 15 to 18,000 pumps they're expecting. And finally, let's talk about potential. Okay, potential man. So one was this. They're planning a capacity expansion. They're targeting to increase around 25 to 30% capacity without stretch in comfort zone. So currently the company can manufacture around, I think, 9 to 10,000 pumps in a month. If I'm being correct, I think it's 9 to 10,000 pumps in a month, full capacity. And they're expanding around 20 to 30%, the capacity expansion. Now, potential. Okay, big potential. Maharashtra order flow will continue because Magel Kyala is going to have around 8.5 lakh pumps. Out of the 8.5 lakh pumps, only 2 lakhs allocation has been done till now. Execution is still in process. So further 6.5 lakh pumps to be in Maharashtra only. If you compare just with our number, what we have around 15 to 17% to 18% market share, as per Crisil is a credit rating agency. They give financial reports. So according to Crisil, company has 15 to like 17% market share in Megaltiala. Crisil in Megaltiala, as per report, that gives comfort for us to have it. And meanwhile, PM Kusum is also going to be arrived. That is also there. We've expanded in Madhya Pradesh. We expanded in UP, Rajasthan as well. Haryana, we were doing already business there as well. So we have the geographical spread as well. In Madhya Pradesh, we want to do very large quantum that is publicly known to everyone. In UP also, I believe yesterday only was some quantum has been sanctioned by the cabinet that is going to help us acquiring more business. So Magel Tyala alone, 8.5 lakh pumps. In Maharashtra, Magel Tyala, 8.5 lakh pumps alone. Out of that, only 2 lakh pumps have been allocated. Execution on those is still going on. So 6.5 lakh pumps are going to be coming. 16 to 17, 15%, let's say 15.5% or 6.5 lakh pumps still to be coming. That is around, is that correct? 1 lakh pumps. If they maintain the market share, let me do this again. Hold on. 1.55 into 6 lakh pumps. Number seven. Okay, 1 lakh and 750 pumps. If they can maintain a market share. So from Maharashtra alone, this is their like big opportunity. Then PM Kusum 2.0 is arriving, expected to be 3 times as large as the previous one. They're expanding in other states also. That is it. That was the entire video. Thank you for watching. And again, UP, more quantity of pumps is expected. I think something was sanctioned by the government also. So they're expanding in more geography, and in the existing geography they're currently in, more stuff is expected to come. Massive stuff is expected to come. This is GK Energy. Let us see if they can improve the cash flows, and let us see if they can continue this very impressive growth momentum in the future. Bye.